Now, close to 2 weeks ago, Kenya became the only country in East Africa to introduce a law that puts a ceiling on bank interest rates at 4% above the prevailing Central Bank of Kenya referenced benchmark rate. But will Kenyan banks operating in other East African countries be guided by the new law? KTN's reporter in Rwanda, Eugene Anangwe, sought clarification from the managing director of Equity Bank in Rwanda.
Question here in Rwanda since the announcement of the introduction of a cap on interest rates by Kenyan banks has been whether these Kenyan financial institutions with presence across the East African community would implement the same rule outside of the Kenyan borders.
We are a region that is integrating. And integration comes with, whatever happens to one affects the other in one or the other. We're seeing, with Equity, much as we are operating in Rwanda here, we are part of the larger group. We are part of the Equity group. Share is being affected downward in Kenya because it's a perception that investors have that, with the capping of interest means reduction in returns, and therefore downgrade the potential to make returns. But of course, what happens to Kenya does have an impact on us, particularly some of the banks or investments that stem from Kenya. But we are in very good books. We don't have, I'm not affected here. I've not been asked to reduce a coin on my interest rates.
Right. In June this year, the Central Bank of Rwanda kept its benchmark interest rate on hold at 6.5% and a lending rate of 16.95%.
In fact, if you look at the reasons why probably in Kenya they were voting for capping interest rates, there were arbitrary practices probably here and there. But here I don't see any arbitrary practices. We operate with full disclosure to Central Bank. They know how much our margins are. They know how much what the cost of funds structure is. They usually engage us. We meet occasionally to discuss these things. So I would say we are running a very good, sound monetary economy here that is supportive of development. The capping of interest rates is not a bad thing per se. It is probably a correction of the market. Maybe what they used to, the tools they used to achieve it may be questionable. Capping interest rates in any economy is not a good thing.
The bottom line.
So my message to my customers and Kenyans who are in Rwanda doing business in Rwanda, what happened in Kenya will not happen in Rwanda. But of course, I think the central bank would be best placed, or government of Rwanda best placed to say that. But my own prediction, it's very stable here.
With the Central Bank of Rwanda, the regulator of financial institutions here in Rwanda, having given no word or directive on the interest rates offered by Kenyan financial institutions, then it only means that those banking with these institutions here will have to wait a little longer to enjoy the fruits that come with the interest rate cap. For KTN News in Kigali, Rwanda, I'm Eugene Anangwe reporting.